Hello and welcome to another Workplace Pension Guide from Penfold. My name's Belle, and in this video, I'll be walking you through everything you need to know about pension salary sacrifice. Okay, first, a quick definition of what salary sacrifice is. Salary sacrifice is a government-backed scheme that lets employees swap or sacrifice part of their salary for another non-cash benefit. These sacrificed earnings reduce their overall salary, but also mean the employee has to pay less national insurance. This also reduces the amount of national insurance the employer has to pay. You may see salary sacrifice used for company benefits, such as cycle to work schemes, but one of the most common ways of using salary sacrifice is with a workplace pension. When an employee agrees to take part of a salary sacrifice scheme, they essentially agree to use a small part of their monthly pay for their pension. Rather than paying a part of their earnings into their pension every month, they get paid less on the agreement that any money they sacrifice goes straight into their pension instead. The benefit? By reducing the money they receive right now, they will pay less tax and get to keep more of what they earn overall. Here's a quick example. Let's imagine Rachel works for a small business and earns £50,000 a year. Before salary sacrifice, she paid 5% of her earnings into her workplace pension, with her employer adding a further 3%. That works out as £4,000 a year. With salary sacrifice, Rachel could be keeping more of what she earns. Now, on paper, she earns £47,500 a year. She's sacrificed the 5% of her salary that she was previously adding into her pension. This contribution comes entirely from her employer. She's still adding £4,000 to her pension every year, but by reducing her salary, she's trimmed her tax bill. The great thing about salary sacrifice is that it also helps employers. Because salary sacrifice reduces an employee's earnings, you're also reducing the amount of national insurance your company owes. National insurance tax is calculated on gross salary before any deductions. Reducing an employee's on-paper salary means you'll owe less in employer national insurance contributions. Here's what that means for your bottom line. The bigger your company is, the more you'll save. You may be familiar with the idea of employee pension contributions being paid pre-tax, before income and national insurance deductions. This is known as the net pay approach. Salary sacrifice is a little different. With net pay, your employees' pension contributions still come from their salary. Their yearly earnings don't change. They just use a percentage of their income to pay into their pension. For salary sacrifice, technically the employee doesn't pay anything into their pension. All contributions come from the employer, supported by the employee's sacrificed earnings. It's a small difference that doesn't affect how much goes into their pension, but has a big impact on how quickly tax relief is added to their pot. While salary sacrifice can be a fantastic way to effectively increase your earnings, it will have an impact on anything that is linked to an employee's salary. This means, in some cases, employees may wish to opt out of a salary sacrifice scheme. Here's what to look out for. Firstly, low income. You can't use salary sacrifice where it would reduce an employee's earnings under minimum wage. Any employees with low income won't be able to take part. Second, salary-based benefits. Any life insurance or loan applications that are linked to salary may also be affected. Typically, you can provide a lender with a letter explaining that your employee is part of a salary sacrifice arrangement, but it might be worth double-checking if any employees are applying for a loan or mortgage. Finally, maternity pay. Typically, statutory maternity pay is calculated based on average weekly earnings. That means any income reduction through salary sacrifice will reduce the amount of maternity or paternity pay available. Penfold makes switching to a salary sacrifice scheme a piece of cake. Trim your national insurance bill and help employees keep more of what they earn. We'll handle all the admin and even help out with tax relief claims for higher earners. To find out more, head to getpenfold.com/workplace today.